Hello, my name is Faisal Khan. I was going through my presentations, and this is a very old presentation on how the cross-border money transfer market works. So I thought, I'd run you through it. Certain things may not be valid, but if you're trying to learn how the traditional money transfer works across borders and how the funds are settled, well, this is a good start. So in any remitting territory and beneficiary territory, there's the agent network, there's a settlement bank, there's a money transfer agent, and there is a remitting bank. And likewise, the same applies on the beneficiary end. So let's do an example of explanation of a cross-border money transfer. And this is a traditional model with prepay, basically pre-fund model, and how it would work. So the traditional model, works in such a way that in the traditional model, a user walks into an agent network, as you can see depicted over here, and they either use cash or use some other payment instrument to pay for a remittance. And over the course of the day, other customers will also come in. And remember, they're going to an agent, right? So this is the agent of the MTO over here. And, they put up their money and, they say, okay, these are the remittances that we need to be, that need to go out to, the beneficiary country. At the end of the day, the money transfer operator takes all the money from all the agents. Remember, all the agents basically have a deposit with the MTO. They are pre-funded and pulls everything into a singular transaction. And this would not only just have the transactions for the agent network itself, but also maybe the money transfer operator owns their own stores or their own online presence, etc. So they will bunch everything into a single transaction. And what this means is basically, along with the money that needs to be remitted across, the MTO basically prepares a file that has the instructions on how to break down the remittances to the individual orders that came in for distribution. And this is basically known as the settlement bank. This file is basically prepared for the settlement bank in the beneficiary territory. And what happens is, the file is sent. It's typically sent over secure FTP or secure email, or maybe they have an nowadays XML is the right way of doing it, or maybe they have web service working. And basically the in all the money transfer receipts are sent to the receiving MTO. What happens with the money? The money is then shipped off to the MTO of to the settlement bank that the MTO has on the remitting side. So there's a settlement bank that they work with, and this is the bank that all it handles all the money, etc. Not all banks handle remittance clients. This is why nomenclature is assigned to the banks that do work with the MTO. So this is why we're saying this is a settlement bank or the bank that's working with this MTO, and they may be a different remitting bank, and we'll come to that right now. The settlement bank then initiates a swift wire transfer to be sent across to the beneficiary's settlement bank, usually through an intermediary known as a correspondent bank. And this is the remitting bank or the correspondent bank. So this case, let's say it's going from USA to Philippines. So this could be Deutsche Bank or Standard Chartered Bank in the US, and they will send it across over there to the receiving bank. The correspondent banks obviously sends the money through SWIFT, and the receiving bank on the other day gets it. Now with SWIFT GPI, they can get it in a matter of minutes. Previously, it used to take a day or two because of the time difference in the operating, follow the sun cycles. But now typically it arrives within the day or the same day. The receiving bank then informs the settlement bank, the local settlement bank on the beneficiary side, hey, guess what? I got your money. And the money that I have gotten, and let's say in this case it was Pakistan, they say, okay, you know what? I'm going to convert them into Pakistan rupees. So they take the dollars and they surrender the dollars. The dollars are surrendered to the central bank. And in which case, which improves the economy, and the local currency is provided to the settlement bank. The settlement bank then says, informs the money transfer operator, hey, listen, I have your money in local PKR, here it is, and you are now all set for distribution, which is what they do with the agent network, right? So, money can either be given out either direct in bank deposits or cash over counter, COC, thereby it completes the remittance cycle. The MTO then starts to distribute this money either via direct bank account deposits or agent cash over the counters, therefore completing the cycle. And the two users can say, "Hey, I sent you money. Did you get it? Yup, I just got it. Thank you, etc." And this is an example that was a batch process where the two MTOs are basing their transactions on trust. The two MTOs do not interface or integrate with each other in any manner. The only common denominator is the file sharing that they do to break down the remittance and disperse them. But do remember there is a pre-fund that has happened over here, and we'll talk about that. But in the example I showed you, it was a Swift transfer. So now we'll show how the pre-fund works. The second element of trust here was the money. Until and unless the beneficiary MTO did not receive the money from the remitting MTO, they did not distribute any money. So in this example, this is called funds good and settle, or upon realization of funds on the receiving end. So this MTO said, listen, until the money comes into my settlement bank, I am not distributing anything. I'm not using my money. So if you sent a remittance, send the money across, and then I will do it. So, what happens when both parties can trust each other with the money in advance, and how will that change the game? This is called the pre-pay or the pre-fund model. And very quickly, let me show you how this works. In this case, again, let's look at the same scenario where a remitter wants to send out a remittance, and now it uses a pre-fund model. So the sending MTO places an advance deposit with the receiving bank. Let's say this is $100,000, and this is always be available to the receiving MTO. So the sending MTO is pre-funding into the beneficiary country. And remember, it's not converted to the local currency yet. It is only converted when the actual remittance arrives. So same thing, a user walks in, they want to send $1,000 to Pakistan, they pay for it. The rate is quoted by the receiving bank. They say, okay, let's say $1 is equal to 100 PKR. Remember, this presentation was made a couple of years ago. You can see from here in about 2014 or something like that. And that was the prevailing rate at that time. I wish it was today. But anyways, so they quote the rate over there to the agent network. The agent network assigns their fee onto it, let's say, which is $15, and agrees to the transfer. So the hundred and so as for the U.S. law, everything it has to be clarified over there. The funds to transfer is 1,000, cost to transfer funds is 15, total amount paid is 1,015, exchange rate is 100, and the amount that would be received would be 100,000 rupees, and the fee that is not converted is this, and this is part of a Regulation E of the Consumer Financial Protection Bureau, or otherwise known as the Dodd-Frank Act, Section 1072 BC. So over here, the instructions are sent, and they say basically, hey, deduct $1,000 from our balance and please pay out to the MTO, and that is exactly what happens. $1,000 is deducted. 90, and by the way, I'm doing these slides. You can always pause the slide on YouTube and look at it and so forth. So $1,000 is deducted. It's given to the MTO, which goes into the settlement bank, and settlement bank now has 100,000 rupees, and they give it out to the agent network. And so they can settle it over there, and the prepay fund has only 99,000. And this is how the commission was split, the $15. Let's assume it was a 50-50. This is 750, this is 750, etc. So with the transfer complete, this is what the status looks right now. But there are two elements missing. Can you spot them? What are the two elements that are missing? Well, let me tell you. The $1,000, the US $1,000 that was received by the MTO in the remitting country, this needs to be sent across to the prepay account to level the top-ups. It's sitting right here, but it needs to go across. So that is there. And how does the receiving MTO make money? The receiving MTO makes money on the exchange rate, because, and that was the second question. How do they make money? So they make money on the exchange rate. They quoted the rate of 100 rupees when the actual street rate might be 102 rupees. So they are making 2 rupees on the transaction. Hence, they're making rupees 2,000 as income. And you can read this slide by pausing the YouTube video, and then you can understand what happened over here. So this is the pre-fund model. Then the $1,000 is sent across, and now the balance over here is zero, and the receiving bank gets $100,000 in balance. The commission was received over here. The beneficiary has received $100,000. The sender has paid 1,015. The 15 is over here. So everything balances out. Final position. Once all the funds have been settled and payment is sent across, this is how the ecosystem would look like. So that's the full and final position of a pre-funded model. I hope this was, illuminating for you. I will try to put up a link of this presentation PDF in the video below, and you can download it at your leisure and use it. As always, if you have a question or a comment, please do not hesitate to contact me. There's a contact form in the description below. You can comment generally about this video in the YouTube comments, and also there is a WhatsApp number below. If you have any other things you want me to consider, or any other types of videos you want me to make, please do not hesitate to contact me. Till next time, this is Faisal Khan signing off. Stay safe and see you soon.